What's up, guys? So in this video, I'm going to be going over retail versus institutional trading. Okay, you're going to figure out how to trade it, how to spot it, tell you literally how it works, all of that inside this video. Okay, now originally I was just going to keep this video for the students inside the Freedom Team, but I decided, you know what? I think it's very important that you guys understand this, because if you're not trading with the banks and the institutions, you're just going to get smoked. So hope you guys enjoyed this one. Stick to the end. Because I got a surprise for you, and let's go ahead and dive into it. So let's go ahead and look at AMD on the daily chart, give you a quick breakdown here. So retail only makes up a very small percentage of the actual trading volume throughout the stock market. Okay, institutions, banks, hedge funds, those are the guys that are really playing with a lot of money, and they control basically a lot of the stock supply. Okay, what I mean by stock supply, I mean, if you are, a institution or whatever, or multiple, and you own a large portion of the stock, right, you're controlling the supply, right? So if you're sitting here, right, you're probably selling a lot, right? You're selling shares. You're right. If you hold a lot of shares, you're definitely selling a lot down here, right? So you're selling some shares. And so what happens is, for price to get a big move like this, they're simply just cutting off supply. And what that means is they're simply just not selling. Right, and if you hold like all of the shares of a stock and you stop selling, then nobody else is going to be selling, right? Because you hold a lot of the stock itself. So if majority of the shares being held are not being sold, and they're just being like held onto, the price is going to skyrocket. Okay, that's what causes price to go up like this. It's obviously you need buyers involved, but if there's no sellers, then buyers will fuel price to move higher. And so what happens is, at this point in time, right here, the institutions decide to shut off supply. So they stop selling, right? And then price comes all the way up here. And so they're selling more, right? They're selling a lot of their shares. They're selling. Brings price down back to this low. And they buy it up all again. They buy and buy and buy, right? And then they just don't do anything. They hold, right? And since there's nobody selling, price just goes drifts, and then boom. They cut off supply, and price comes all the way up back here to the top, okay? And then same thing, they start selling up here, selling. Price comes down, they buy some more, rips higher, right? They're not selling any over here, price rips, and now they're starting to sell as price comes back lower, right? And all they're doing is repeating the same exact process, okay? Now, a big way to really understand this as well is going to be based off the pullback sizes. Okay, I'm going to look at Google as an example here. Right, so actually I'm going to look at UAL as an example, not Google. So UAL, right, if we see something like this, right, get rid of this line, we have price make a move higher, we come down, we move higher again, a little consolidation, move higher, and then drop. Okay, this is the classic pattern that you're going to see institutions do. Basically what's going on, actually I'm going to use, I'm going to go back to UAL. Basically what's going on is essentially, right, they're all buying down here, right? Institutions getting bought down here, right? So what happened is we have a consolidation, right? So everyone who's in retail, they're thinking, okay, where are their stops going to be? I'm going to explain this a little bit more in depth later in the video. But for right now, they take out the stops, everyone gets stopped out, they're buying down here, right? They cut off supply, it comes all the way up here, it pulls back, we have this nice pullback, and then it comes up here. And now this is an area where a lot of retail traders get stuck, right? This is a classic pattern, right? You have the classic bull flag pattern, breakout, whatever you want to call it, right? It's all the same stuff, right? We have this move higher, we have a consolidation, and you have a bunch of people looking for that move higher, right? And we do get a little bit of a move, right? You get a little bit of a push higher, then we immediately just dump lower, okay? And being able to avoid this, you can do it by simply understanding how the market works. And one of the ways to tell, well, you say, Jordan, price, institutions get in here, right? We have the pullback, price comes up, and then it comes down, institutions buy, we come up, we come down, institutions buy. Why did it all of a sudden drop here? Like, why at this moment did it drop, right? Instead of, here. Why was it up here? And the reason for that is the pullbacks, right? You got to understand something, okay? Go back to the basics, right? Institutions are not buying high, right? They're buying low and they're selling high, buying low and selling high. And so when you see price do something like this, right, we have this pullback, we move up, we have another pullback, we move a little bit higher, institutions are not buying this pullback, okay? Just because we pulled back a little and price, went a little higher does not mean institutions are getting in here, right? If we look back at this range, like we have this big range here, right? Institutions, if this is the range, the low, if we go classic, again, like simple, buy low, sell high. You want to be buying down at this area and selling up at this area. So if we zoom out a little bit and we say, okay, time frame perspective, we just made a huge move up, okay? Did you really think institutions are going to be buying up here? Like those are the ones who just caused price to go up here. They're selling up into here. And so when you see that price doesn't actually pull back, like if we take from this low to this high, we only pull back a little bit, that's your key. Like right there, that is the key you need to understand. If we have a small pullback, not a deep one, right? Very small one, and we start to consolidate, that does not mean institutions are buying in this area. Okay, that is not what is going on. Okay, they're still selling in this area, actually. And so when you see, it's all classic. Like this is the very classic retail pattern. When price does this, we have that bull flag breakout. A bunch of retail is buying up here. Everyone's trying to buy up here. And what happens is they get stuffed, right? All the institutional investors are shorting and selling up here, and they're a lot stronger than retail, so retail ends up getting crushed. And when retail gets crushed, they have to sell, and that drives price even lower as well. Okay, so that's basically what's happening behind the curtains. When you can really understand what's happening, you can make money. So essentially, by understanding this, you can just realize that you only really need to trade deep pullbacks, right? This pattern will happen all the time. You'll see price move up, we'll have a deep pullback where institutions buy, right? We'll have a fast, huge move higher, right? We'll have a small pullback, more consolidation, and we have that push higher again. Oops, I just got rid of it. Just like this. We have that push higher again. This push higher again after we get that small pullback is a fake one. Okay, this is not real. Now, not 100% of the time, but majority of the time, this is not real, okay? Because institutions are not going to be buying in this area, right? They're buying down here, right? If you zoom out and look at the higher time frame range, like, if we're in this range from 64 up to 80, 82, institutions are going to be buying at the bottom half of that, okay? Not the top half, right? That's where they're going to be selling. So even if we do get the little move higher, right? This is not where you want to be buying. In fact, this is where you want to be waiting for price to actually reverse and get short. Because a lot of retail traders are going to be trapped, right? They're going to be buying up here. They're going to get trapped. They're going to have to sell along with institutions because price is all the way up here. Like, it just made a huge move. They're going to want to get out too. And that's when price ends up going lower. Okay? Now, another big thing as well is understanding earnings and news. Okay? So we look at something like Google, for example. You guys gotta understand how retail thinks, right? If price is in this consolidative phase right here, right? We're in this little thing right here. And right here, Google has earnings, okay? What's gonna happen after earnings, okay? Stock gaps up, and there's probably good news, whatever it was. Maybe they had better expectations for the next quarter. Whatever it was, stock gapped up, it had good earnings, whatever it is, good news, upgrades, whatever you want to call it. All of retail is going to be buying that. You got to understand, when price is breaking out of a past high or low, especially on fundamental news, that is going to be like a retail's dream, right? Everyone is going to be bullish on that. Nobody's going to be bearish. And so what happened is that's actually when price ended up going lower. Because you got to understand, what happened before that? Right before that, if we zoom out, well, price was all the way down here. We just made a fast move higher, right? So you gotta understand. Okay, if I zoom out, where are we really in terms of range? If we look at the past 3-4 months, right? Let's say we're just looking at this price action here. The past 3-4 months, right? This is the low, and the high is all the way up here at 108, right? Where do you think institutions are going to be buying in this area? They're not going to be buying all the way up here. I can tell you that, especially after earnings. They're going to be buying way before the move even happens. And so if you're able to understand this, with the pullback scenario, understanding that they only buy deep pullbacks, they're not buying short pullbacks, you're going to save yourself a lot of trouble. Okay? You're going to save yourself a lot of trouble. All right? Let me see if I can find you guys another example as well. I don't know if I can find it off the top of my head. The last thing I want to talk to you guys about as well, going back to what I said earlier, the double tops and double bottoms, right? That's a classic pattern, classic support resistance. Everybody knows that, right? So when you see something like this and UAL, okay, when you have this double bottom here, right, that's a big sign for retail traders to say that's where that's a very strong support. That's what they would say, right? The case is that's actually the opposite. Okay, when you see double bottoms or I see double tops, a lot of bottoms or tops lined up, that to me is a sign that price wants to break and actually go through it. And the reason is you need to understand, like, where are the stop hunts? Where are the stop losses, right? If you see this huge consolidation, just like this, okay, it's very easy to determine, oh, there's going to be a ton of stop losses right below. You know everyone who's getting long is going to want to get out if price gets below this support, right? Same thing the other way. If you're short and you know we have this tight consolidation, a lot of traders are going to have their stop loss above this high. And so that also fuels the liquidity for the institutions, right? So when price ends up breaking this low right here, right? And everyone, all of retail, other banks, whoever it is who's long in this area, they need to sell. And they're selling into another institution who's buying. And they're picking up all of this liquidity down here. Okay, that's all they're doing. They're taking liquidity. Okay, because these guys are trying to get filled millions and millions of shares. Okay, and they can't just market order that buy, right? They need to collect it through limit orders. And so what they do is they just let sellers come to them. And when price comes down and everyone needs to stop out, and you also get new, short-term traders looking to short when price breaks down, trading the bear flag, right? When you see that happen, that's when okay, price broke down of this, so-called support, but we never really did anything. We're just consolidating right here, right? And why is that happening? Why are we not getting that fast breakdown? Well, you can know that, okay, there's probably an institution picking up a bunch of shares here. And then we get the push up right here, right? That's your first sign, okay. Now there's really no real shorts here, right? If there was real shorts and real selling, we would have dumped all the way down, right? Because, after price breaks this low, there's going to be a lot of selling going on. But we immediately get that reversal back high. We come back down, pull back. Institutions are buying more. They're buying as much as they can. Cut off supply, earnings, comes all the way up here, right? And now when everyone says, okay, now UAL is bullish, right? I want to be in it, right? All retail, everyone's buying all the way up here. They're selling everything. They push it down, buy more, and then squeeze it higher, okay? And the same thing, they push it down a little bit. They're still selling in this area, right? We didn't have a huge pullback. They're still selling. Price is still high, right? If we look at this range, price just had a huge move higher, okay? There's still a lot of buying. Still a lot of selling going on in this area. So you don't want to be buying. So what you can do is take this, retail versus institutional trading to your advantage and understand these concepts to make you a lot more money and stay out of trouble, right? So the next time you see something like this, right, and you're thinking of trading that breakout, that bull flag, whatever it is, check the pullback. Did we pull back a little bit or a lot? If we only did a little bit, maybe there's not institutions really buying in this area. They're probably waiting for price to come down lower here. And that's where you want to be buying, okay? So using this is going to help you make a lot more money in the stock market by simply being able to identify where retail is going to be trading, where their stop losses are going to be, right, with the double tops and double bottoms. And using that is going to make you a lot more money and also stop you from losing a lot less money, by simply avoiding scenarios like this, okay? Now, if you guys didn't make it to the end of this video, I do have a private mentorship, and I'm going to give you guys a secret little code here. If you didn't make it all the way to the end, you want to join this, all you have to do is send me a DM on Twitter. Sorry, I just cut out there. Why don't you guys DM me the word retail? Okay, if you DM me the word retail, I'll know you came from this video, and I'll guarantee you a spot inside of the Freedom Team. Because I only take on 15 people a month. We get over 100 applications every month. But if you DM me the word retail, I will make sure to hook you guys up with a guaranteed spot. So thank you guys so much for watching until the end. Please leave a like, subscribe if you haven't. Comment down below other videos I should make. I'll go ahead and do that for you. and I'll see you all in the next video.